Good morning and welcome to the Killik & Co market update. It's been a volatile week for markets as investors closely monitor US economic data ahead of the Federal Reserve meeting later in the month, where the US Central Bank is widely expected to cut rates for the first time since the start of the pandemic. The British Retail Consortium released sales data on Tuesday and it surprised to the upside, with retail sales rising 0.8% on an annualized basis through to the month of August. This was the highest reading in 5 months, as consumer spending was boosted by the warmer weather, with sales of clothing and gardening products picking up strongly. Separate data from Barclaycard indicated that consumer spending returned to growth in August after 2 consecutive months of decline, with the spending on groceries rising at the fastest pace since March. The equipment rental company Ashtead reported results on Tuesday. The company is listed on the FTSE 100, but generates the majority of its revenues in the US, where it operates through its Sunbelt Rentals brand, focusing on the non-residential construction market and leasing a wide range of equipment which is used in a diverse range of industries, ranging from highway maintenance to the film industry. The company reported a 7% year-on-year increase in the key metric of rental-only revenue in the US market. The company has benefited over the years from an ongoing shift by operators who increasingly rent equipment rather than acquiring it outright. The company has increased its market share in the past couple of decades in a highly fragmented market. Investors initially reacted positively to the news, but their gains were erased after the broader markets weakened on Tuesday afternoon. Investor anxiety resurfaced as concerns mounted regarding the future state of the US economy. Chip makers led losses, with the US Semiconductor Index posting its worst day since March 2020. The US Manufacturing Purchasing Manager Survey was released on Tuesday. The data is based upon a monthly survey of supply chain managers across 19 industries and is a leading indicator of overall economic activity. The manufacturing sector makes up around 10% of the overall US economy, but it has a far broader impact on labour markets, as each manufacturing role supports a larger number of indirect jobs. If a purchasing manager survey reading comes in above 50, it indicates economic expansion. Tuesday's reading came in at 47.2 and represented the 5th consecutive monthly reading below the pivotal 50 mark. This was coupled with data reflecting a further decline in new manufacturing orders and a rise in inventory, which suggests that factory activity may remain subdued for the foreseeable future. Over the long term, there's been a strong correlation between the manufacturing PMI data and the performance of the S&P 500 benchmark, as you can see in this chart. This correlation has decoupled over the past year, as the S&P 500 has been propelled forward by the Magnificent Seven stocks, which currently make up around 30% of the benchmark, although more recently the Magnificent Seven have underperformed other constituents. Japanese Nikkei index has been the largest detractor over the course of the week, after the governor of the Bank of Japan suggested that the central bank will continue to raise rates if the economy and prices perform as they expect. In early August, the Nikkei index experienced its largest single-day fall since 1987, after the central bank increased interest rates. Japanese interest rates have remained materially below other advanced economies, and investors took advantage of this by borrowing in Japanese yen and converting to currencies offering higher interest rates. The closely watched US employment data will be released this afternoon. Economists forecast that the US added around 160,000 jobs in the month of August, rebounding from the weak July report when job creation came in well below consensus expectations. The Federal Reserve are widely expected to cut interest rates when the committee convene later this month. Investors have priced in an interest rate cut, and some economists even forecast that the Fed may cut rates by a half percentage point in light of recent data. The job opening survey was released on Wednesday. This is a key barometer for the health of the labour market. It showed that job openings for each individual seeking work has trended down to a little over 1, having fallen from its peak of more than 2 openings per job seeker in early 2022. The number of openings does remain very elevated when you compare this to the long-term average levels, however. It's another quiet week ahead in the earnings calendar. On Tuesday, Associated British Foods will be reporting. This is the owner of Primark. And on Thursday, Adobe and Kroger will be reporting. That's all from us this week. If you have any questions or comments on today's update, please get in touch with us by emailing info@killik.com. Have a great weekend and we'll see you soon.